G'day folks, welcome back to Pete's Investing. It's April 19, 2024. This is the analysis for the S&P 500, the Nasdaq, the Japanese Nikkei, and the German DAX, and we also look at the VIX. Before we go to the charts, let's look at the heat map. You can see there on the bottom left, that's the heat map for the VIX, US, German, Japanese, and Nasdaq. Now they're still bullish on the monthly trends, but on the weekly and daily, all the markets are predominantly bearish, with the exception of the VIX. Obviously, they're all bullish across the board on the weekly and daily as well. And also just reference some of the other instruments which we cover on other videos occasionally. So looking at the VIX, the volatility index first off, on our monthly, weekly and daily trends, we use the CCI 150 as a indicator. You can see here it's broken above on the weekly. It's not showing up on the monthly, but on the weekly it's showing a bullish momentum, and likewise on the daily. The monthly may still be a neutral, possibly, but we'll take that along with the weekly primarily at this point. Now, before I move on, you notice the on the daily, I've got a Fibonacci retracement here, and it's actually bounced off that 38% level. And that would have been our minimum retracement between a 23 and a 38 on the daily. So if I jump to the daily and hourly charts, again, there's that daily chart. I've got the ADX showing a bullish movement as well. And again, it's bouncing off that 38% in that range there. That was a minimum retracement target area. If I zoom out on the daily as well, you'll notice the stochastic market forecast, it's just started to draw, still in the oversold territory and making a very slight move to the upside. So again, the daily is broken into a bullish movement on the CCI 150. On the hourly chart, again, you can see there, let me zoom out first, the stochastic market forecast is broken up past the 50 level, which is a slight bullish movement on the hourly. And if I zoom in, we did have this bearish divergence versus higher highs on the price, broke down, hit our target, and that's the same level as that area there. Before I leave the daily as well, just notice on this bigger Fibonacci range, going back to late last year, the price actually came up as almost as high as a 61%, and that 61% is key in all Fibonacci's. It's either going to bounce it down from one of these Fibonacci levels, or if it breaks much higher than the 61, then there's going to be a continuation of that trend. In this case, it's actually bounced down from that 61%. So looking at the S&P 500 first, on the monthly, it's still bullish, with the CCI 150 still above its moving averages. On the weekly though, it's broken down through those moving averages and showing a bearish movement. And on the daily, likewise, it's been that way for a number of weeks now. On the monthly, that's still a weakened sign, because you'll notice there's a bearish divergence, lower highs on the CCI versus higher highs on the price, and we expect that to break to the downside. So I haven't drawn a target yet. I'll draw that in due course once it breaks a bit lower. But again, if I zoom out on the daily, and I'll cover that in the daily chart. We'll go to the daily chart first, might be easier. So on the daily chart here with the 1 hour chart, before I zoom in, you'll notice the stochastic market forecast is in the overbought territory and starting to turn down, so that's a weakening sign. If I zoom in, you'll see there in that Fibonacci range, it's actually broken and probably just kissing that 23% level, and we expect it to break even further. You can see there the CCI is still falling, and the ADX is showing a bearish trend as well. So this is a continuation of this bearish divergence on the CCI, and we expect that to fall even further. On the 1 hour chart, before I zoom in, you can see here the stochastic market forecast was in the overbought. It's broken down past the 75 level and now approaching the 50 level. And if it breaks below that 50, it's even a more bearish signal as another indicator to look at. We did draw these various bearish divergence, and there were a few bullish divergence in there, and I've marked them with rectangles. And zooming in more recently, we had a couple of bullish divergence here, and they both rose slightly and hit our targets identified by those rectangles. And more recently, the price has dropped since our last video, you can see there, but notice we've got a new bullish divergence forming, and it goes up to that level there. So reading the same levels on the price chart, it goes down to those. Now with this, the price can still keep dropping so long as the CCI can still rise or drop For this divergence to invalidate, we need to see the CCI drop lower than that entry point. But at the moment, that divergence is still in play. So we'll wait for it to see how it goes. As long as the price keeps dropping, we're going to continue tracking it. I'm not going to draw a target because this can turn up any time. For example, here it pulled up a bit, but then it fell further. So I'm going to leave it until next few hours, see how it goes. If it starts rising, the very minimum target level will be the 23-38% level, and we take it back to that previous high, would have been that point there. So just expect it to pull back at some point with a retracement at a minimum. Next, we look at the German DAX. Again, on the monthly, we're bullish. On the weekly, we've broken into a neutral positioning because the CCI is in that moving average band. And on the daily, it's broken bearish. And I've drawn Fibonacci in that range there. You can see there it's just about to touch that 23-38% level. So it's just shy of that in the coming. So I may see that break down there in the coming hours, if not days. If I go to the daily and hourly charts, again, before I zoom in on the daily, you can see there on the stochastic market forecast, it's still in the overbought, although starting to turn down. And again, there's that Fibonacci range, and you can see it's just about to touch that target area. On the 1 hour chart, it was in the overbought territory for a number of months, and it's actually broken down now past the 75 level and approaching the 50 level. And if I zoom in, again, we had those various bullish and bearish divergence tracking along that period. And more recently, we had a couple of bullish divergence there. You can see that the price did bounce slightly. And again, these divergences don't mean a full retracement, just means a bit of a slight retrace. And what we have at the moment, we have higher lows on the CCI, and we can consider that a double bottom. On the price chart, I still consider that a bullish divergence, so we may see it bounce in the coming hours with a bit of a retrace at the very minimum. So again, if this breaks lower, that's going to confirm the bullish divergence as well. Next, we look at the Nikkei, the Japanese market. So you can see on the monthly, it's still bullish above its moving average bands. The weekly's broken down through those bands, and it's giving us a bearish trend. And on the daily, it's been in a bearish trend for a number of months now. Again, zooming in, before I zoom into the daily, notice there is no divergence on the monthly, but on the weekly, if I zoom out, we had this lower highs on the CCI versus higher highs on the price. And if we drew a target, I'll draw a target on that one while we're here. So on the weekly, that'll be the Fibonacci range because we go back to the previous low before that divergence started. And that'll be our target area between the 23 and the 38% level. So we expect it to fall down to that level on the weekly as well. That's our minimum target area. On the daily, we've had another Fibonacci range, a smaller Fibonacci range. You can see there it's already broken through that 23-38% level. It's actually penetrated the 38% level. Now it's approaching the 50 level. If this tracks lower and actually breaks below the 61%, then I'll move the Fibonacci's to a lower level and I'll see it keep tracking it. And we do that continuously until it goes to the lowest point, which will be at this level down here. But at the moment, it's just broken past the 38% level, and the next level will be the 50% level to look out for. You can see there as we speak, it's still dropping quite strongly. On the daily and hourly charts, before I zoom in on the daily, it still is in the overbought territory, and you can see there it's actually broken down very slightly. And again, I've got a few different, it looks a bit messy, but I've got a few diagonal trend lines. It's actually broken below this first one there. And as I said, if it breaks below that 61%, the next level of support will be this diagonal ascending trend line. On the 1 hour chart, it was in the overbought territory, broke down past the 75, and it's actually broken down past the 50 level as well. So very strong bearish signal so far. It actually broke also below this minor support at 38,300. Yeah, let me just get rid of that Fibonacci. You can see that I've drawn these rectangles indicating where those divergences have hit their minimum target levels. And zooming in on the hourly chart, remember the hourly has more volatility and generally shows more divergence than the higher time frames. And you can see there already we've got a bullish divergence also playing out at the moment. If I draw that to that, so higher lows on the CCI, and the same range, we've got lower lows on the price. Now this looks like it's still dropping, and we may see the CCI drop slightly, but as long as that trend on the CCI remains bullish and the price keeps dropping, we're going to consider that a bullish divergence. So we may see it rise somewhere in this area, probably towards this support area at 38,300 if it started moving up from today, and would draw a Fibonacci up until that recent high before that divergence started. So just expect a bit of a bounce in the near term, at least a small retracement. Lastly, looking at the NASDAQ, on the monthly, it's still bullish, although notice we do have a bearish divergence on the CCI, and that's starting to pull back towards this moving average range versus higher highs on the price. And if it gets much lower, in fact, I'll draw it now, that it needs to be drawn back to this point here in terms of a Fibonacci retracement. So if it starts, assuming it doesn't rise any further, that's our minimum target area. Oops. Let me just get rid of that. So the minimum retracement level will be between that 23 to the 38% level on the NASDAQ on the monthly. On the weekly, we did draw the retracement previously, and you can see there's a bearish divergence on the CCI, lower highs versus higher highs on the price. There was previously another bearish divergence back here versus that little range there, and that pulled back, hit our target. In fact, it went a lot lower. And if I, just for reference, if I drew a Fibonacci between that low and that high, you can see there it bounced off that 61%. Remember, that 61% is a key area to look out for. So that executed nicely. It bounced off there. And the next level we'll have is we'll go back to the same level of that Fibonacci range, because that's where we're looking at that range there between those peaks there, and that applies between those peaks there. So that'll be our minimum retrace level. That'll be down there. And on the daily, it's a bit slow to respond. Here we go. On the daily, we've got another retracement between that Fibonacci range. You can see there it's already punched through it. And again, similar to the other charts, if it keeps dropping, we expect it to fall and break below the 50. And the next level of support will be the 61%, like I said. So again, firstly, we need to see if it breaks below the 50 before we get too excited about any potential reversal. Now, zooming in on the daily and hourly charts. First off, on the daily, on the SASIC market forecast, still in the overbought territory. No real strong decline yet. Again, we spoke about the daily divergence, the bearish divergence. And looking at the 1 hour chart, it was in the overbought, broke below the 75, and now it's actually breaking below the 50. And again, we did mark these various bullish and bearish divergence along the trail. And zooming in more closely, more recently we had a couple of bullish divergence here, bounce, hit our targets, and we did draw initially a target area of that Fibonacci range with a slight bullish divergence back there. That would have hit that 23% level, hit it, and then fell off again. So if I deleted, or if I drew that Fibonacci to that level, because now we're measuring that lower, or that low there on the price chart, and we need to take that. Oops. Let me draw that again. It's all getting a bit. So if I draw that divergence down to that level versus the CCI, again, we need to see it bounce off that level there, assuming it does so. And that'll go towards that previous high between that Fibonacci range, that high. Actually, no, it'll go to that high first, down to that low. So that's where we are at the moment. Still falling. No sign yet of a retrace. You can see there the CCI is also continuously bearish. Now, for those that want to know just a trading idea, we do look at this CCI. So for example, when the weekly and daily, especially the weekly and daily, but especially if the monthly is also showing the same trend, in this case we're going short, you would have taken a short position, for example, when it broke below the CCI there. You would have taken that short position there and closed out that position when it broke up into that moving average band in that range there. So that would have been a nice little trade to take a short position on any time on any instrument, but this is just an example on the NASDAQ. Now currently when the prices or the CCI is moving against the price action, I don't trade divergence. I use that as an area to look out for potentially avoiding taking short trades in this case, and I wait for it to break again to the downside. So you may possibly have taken, for example, that little short trade there and closed it out when it broke above the moving average band. Take another little short trade in that area there, and currently it'd still be in the trade because that hasn't broken up in that moving average range. So again, just as a trading idea, how to trade the CCI. To support us more, go to the Patreon page for Pete's Investing, where we also do weekly scans of blue chip shares that are trending along on a longer and medium term timeframes. Feel free to support us there, and we'll see you in a future video.